This video is created by Jagrat Creation. It is on cash budget. I intend to solve one sum here before you, wherein not only cash budget will be prepared, but also projected final accounts at the end of budget period shall be prepared. Before I start, let me mention why we prepare cash budget. We prepare cash budget to find out the cash balance available during the budget period. Budget period is a future period. This budget period may be bifurcated either in weeks or months or quarters. So we prepare a cash budget to find out the cash balance either at the end of every week or at the end of every month or at the end of every quarter in a budget period. When we want to find out the cash balance for future period, we are required to estimate the receipts and payment expected to occur in budget period. By preparing such type of cash budget, we come to know, shall we face shortage of cash or shall there be a surplus cash? It ensures to maintain the sufficient cash balance for the operating activity. If we anticipate cash shortage, we may start or we may take measures to meet with the cash shortages. Or if we have a surplus cash and if we don't hold any other use thereof, we can invest in a lucrative manner for a short-term period. So this type of decisions can be taken by preparing cash budget. Now I want to solve one sum here before you. Just observe the sum on the screen. Read it carefully. I am going to explain you and solve the sum here before you. You can pause the video and read it carefully. Radhesham Manufacturing Company Limited has given the following information. You are required to prepare the following statements: cash budget for the period April to June 2018, forecast the profit or loss, and balance sheet for the budget period ending on 30th June 2018 for 3 months from April to June. This is what we intend to prepare. Information given. Actual and budgeted sales is given to you. We are preparing this budget on 1st of April. So January, February and March are the period in past for which we are given actual details of sales, actual details of purchase, actual details of wages and actual details of expenses. Now we are preparing this budget on 1st of April 2018. So April, May and June are the period in future. For that, estimates about sales, estimates for purchases, estimates for wages and estimates for expenses are given to you. Over and above this actual and estimates given, the other information says that property tax payable in May, purchase of plant in April, rent 300 payable each month, 10% of the purchase and sales are for cash, so naturally 90% is on credit basis. The credit purchases are paid within 1 month. Sales are collected after 2 months. So time lag for Credit sales is 2 months. Time lag in payment of wages and expenses is just 1/2 month. So, any monthly expense, the time lag is 1/2 month. So, first April wages will be paid on 16th of April. 2nd April wages will be paid on 17th April. 3rd April wages will be paid on 18th wages. So first 15 days will be paid. First 15 days of April will be paid in next 15 days of April. And last 15 days of April will be paid in next month. That is in May. So when there is a half month time lag is given, half is paid in the current month and half in the next month. That is what students should understand. Cash and bank balance as on 1st of April 13,000. It is estimated that there will be no stocks of raw material, work in progress and finished stock at the end of each month. Now we are required to prepare the cash budget. Let me start. I am also required to prepare the balance sheet at the end of the budget period. And if you observe, you won't find capital balance anywhere in the sum. So I am required to find out the capital balance by preparing balance sheet at the beginning of the budget period. The beginning of the budget period, that is equal to end of the actual period that is completed. So I am required to prepare the balance sheet as either as on 31st of March 2000, or it may be said that I am required to prepare a balance sheet as on 1st of April. Now let me start. Here I prepare the cash budget that is being questioned. Opening balance, receipts, cash inflow, cash outflow. In the opening balance, cash inflow will be added, cash outflow will be deducted. I will get the closing balance of April. Closing balance of April will become the opening balance in May. Similarly, May inflow, cash receipts, estimated cash receipts will be added. Estimated cash outflow will be deducted. Cash balance at the end of May will be found out. That will become the opening balance in June. Same way I can find out the closing balance at the end of June. I am required to prepare the balance sheet as on 1st of April to find out the capital. I am going to prepare projected trading account and profit and loss account. And also I am required to prepare the budget. I am required to prepare the balance sheet for a date on that budget period ends. So this is what I intend to prepare. Let us start with the information. The property tax payable in May 4,000. So in May you are required to pay property tax. If you pay property tax, cash outflow occurs and this is an expense, so it is debited to profit and loss account. Purchase of plant in April 10,000. So you are required to pay 10,000 for plant in April, and plant purchase will appear on the balance sheet asset side. This balance sheet asset side that I am required to consider as on 30th June 2018. Because plant is purchased in April, it will be as your asset on 30th June 2018. It cannot be the asset on 1st of April 2018. Rent 300 payable in each month. So payment of rent every month. So I pay for April, for May and June. So 300. Total 900 paid is an expense. This expense will be debited to profit and loss account. 10% purchases and sales are on credit terms. I am given the actual purchases for January, February and March. Estimated purchases for April, May and June. Let me prepare a working note wherein I write down all the purchases as you see on the screen. Now 10% purchases are for cash. So 45,000 into 10%, 4,500 cash purchase is made in January. So cash paid in January. I don't want this information because I am not preparing the cash budget for January. Cash purchases of February, 4,000. I don't require because I am preparing a budget for April, May and June. So cash purchases of March are not relevant to me. But the cash purchases of April, for which 5,000 will be paid in the month of April, In May, 4,500 will be paid, that is 10% of 45,000. And in June, 35,000 into 10%, 3,500. These are the cash purchases. So these cash purchases are paid in April, May and June, that I write cash outflow in my cash budget. Now I will deduct this 10% cash purchases from the total purchases and I will find out the credit purchases. So credit purchases for January, 40,500. Credit purchase for February. Credit purchase of March, 42,000 minus 4,200. Credit purchase for April, 50,000 minus 5,000. Credit purchase for May, 45,000 minus 4,500. Credit purchase for June. Now the purchases are paid within 1 month. Notice. So 1 month is the time lag wherein you are required to make payment for purchases. So January purchases, credit purchases, January credit purchases are paid in 1 month next. So 1st January paid on 1st February, 2nd January purchase is paid on 2nd January and so on. So January paid in February, February payment is not required, February paid in March. I'm not preparing the budget for March, so this 36,000 payment made in March I don't require. But the March credit purchases are paid in April. That is relevant to me. So credit purchases paid in April for which I am preparing a budget, that is 37,800. May credit purchases, April credit purchases are paid in May. May credit purchases are paid in June because 1 month is the time lag. So these are the payments made in April, May and June for the credit purchases of March, April and May. This payment I write as cash outflow. So payment for credit purchases in April, May and June, that I write in the cash budget. Now these are the total purchases that I will debit to my projected trading account. These are the total purchases of cash and credit purchase both together. April, May and June, 50,000, 45,000, 35,000. This is total. 1,30,000 purchases are debited to projected trading account. Now the most important point is March credit purchases are paid in April. So at the end of March, 37,800 was outstanding as creditors, which I am required to write in my balance sheet that I have prepared for 1st of April. Similarly, 31,500 is a purchases made in June to be paid after 1 month. So that is going to be paid in July, but it is outstanding as on 30th June. So outstanding purchases, creditors, as on 1st of April that I am required to write on the balance sheet liability side, and the creditors payable at the end of 30th June that I am required to write in the closing balance sheet. This is how the creditors in the opening balance sheet and closing balance sheet are recorded. The same principle is going to be applied for customers also, wherein the amount won't be payable, but it will be receivable. Now next. These are the details of sales given to me. Actual sales for January, February, March. Estimated sales are given to you for April, May and June. Let me write down them in my working note. Let me write down the actual and estimated credit sales month-wise in my working note. 10% sales are for cash. So cash sales of January, 10% of 80,000, 8,000. Same way, February cash sales, March cash sales, April cash sales, May cash sales, June cash sales. Now cash sales, cash is received. We are preparing the budget for April, May and June. So cash sales received in April, May and June is a cash inflow that I will write in my cash budget. April cash sales receipts estimated 9,000, 8,500 and 8,000. I deduct 10% cash sales from the total sales. I'll get the credit sales. So credit sale for January is 72,000. That is going to be collected in the month of March. I am not preparing the budget for March, so I ignore it. Similarly, February credit sales is once again 72,000. That will be collected within 2 months. So February sales will be collected in month of April, for which I prepare a budget. So it's a 72,000 will be recorded in my cash budget. Similarly, March credit sales will be recovered in 2 months next. April credit sales will be recovered in 2 months next. But May credit sales and June credit sales will be recovered in 2 months next, but they are not going to be recovered by the end of 30th June. So, credit sale time lag is 2 months. So, as I told you, February will be collected in April. March credit sales will be collected in May. Then April credit sale will be collected in June. So here 72,000, 67,500 and 81,000 is a cash inflow that I write in my cash budget. Total sales for 3 months I write on the credit side of my trading account. There are no stocks that you know very well. Now, February and March credit sales not collected by end of March, that is by 31st of March. So this credit sales is receivable on 1st of April or is receivable as on 31st of March. Similarly, May and June credit sales is not collected by end of 30th June. So it is receivable on 30th June. This receivable debtors that I will write in the opening balance sheet, and this receivable debtors as on 30th June I will write in my closing balance sheet. So total debtors to be collected at the end of budget period is 76,500 plus 72,000. Now this is how this information is considered. Time lag for wages 1/2. Let me prepare a working note. Wages January, February, March actuals, May, April, May, June estimates are given. Credit period is 1/2, so 1/2 1/2 paid in the current month, 1/2 paid in the next month. This is the interpretation. So wages of January, half paid in January, half in February. February wages, half paid in February, half paid in March. March wages, half paid in March, half paid in April. So half paid in March. So half paid in March, half paid in April. So March total 22,000. On 31st of March, 11,000 will be outstanding. April, half paid in April, half paid in May. May, half paid in May, half paid in June. June, half paid in June, half outstanding as on 30th June. Now let me write down the payment for the budget period. So 11,000 plus 12,000, the wages paid in April, that is half of April and half of May. So 23,000 will be recorded as cash outflow. Similarly, 12 plus 10,000 payment in May. So half of May and half of April, that is recorded as cash outflow in the month of May cash budget. Similarly, 19,000 will be recorded as cash outflow in the month of June. Now let me write down outstanding wages. This total wages will be debited to trading account. So this total wages I have debited to the projected profit and loss account. You can debit that to trading account if you want to, but it's fine. Now 22,000 March wages, half outstanding as on 31st of March. So it is outstanding on 1st of April. So it appears on the liability side of the balance sheet as on 1st of April. Same way, 18,000, one half outstanding, that is of June, that will appear as outstanding wages in the projected balance sheet at the end of the period. Now, next point, that is of expense. Let me prepare a working note for expense. I write actual expense for January, February, March in my working note. Estimated expense for April, May and June. Time lag is how much? Time lag is half month. So half paid in the same month, half paid in the next month. January half paid in January, half in February. February half paid in February, half paid in March. March half paid in March and half paid in April. April 15 days. First 15 days of April will be paid in last 15 days of April. And last 15 days of April will be paid in next month, that is May. So this is how 7,000 bifurcated into 3,500 and 3,500. May 6,000, 3,000 in May and 3,000 in June. June 2,500 in June and 2,500 get payable at the end of 30th June. So total payment in April for expenses, cash outflow recorded in cash budget, May 6,500 and same way June 6,500 recorded as cash outflow. Total wages and expenses I debit to the profit and loss account. Total 7,000 plus 6,000 plus 5,000 that I have debited to profit and loss account. March 6,000 wages, one half outstanding as on 31st of March. So see, the expenses were 3,000. Wages outstanding were 11,000 plus 6,000, 17,000 wages and expenses outstanding. Similarly, 5,000, 2,500 expenses are outstanding. Outstanding wages are 9,000 plus 5,000. Look at 9,000 plus 2,500. So total wages and expenses are outstanding 11,500. This is how this information is considered. Now you are given the opening cash balance 13,000 that you are required to write at the opening cash balance in the cash budget for April. That will appear on the balance sheet asset side of projected balance sheet. Now let me close the cash budget. Opening balance 13,000 plus cash inflow. Let me consider the opening general reserves that I write on the liability side of the balance sheet, and same is recorded in the closing balance sheet. Now let me close the cash budget. 13,000 plus 9,000 plus 72,000. That is total cash receipts in the April. 5,000, 37,800, 10,000 plus 300 plus 23,000 plus 6,500 is the total payment for April. So total receipt in April 94,000. This is the total of cash outflow April that I am required to total. That works out to be 82,600. So 94,000 minus 82,600, cash balance will be 11,400. That becomes the opening balance in May. Opening balance of May plus cash inflow of May. So total of these three items works out to be 87,400. This is a total payment in May. So if you make a total of this cash outflow for May, it works out to be 82,300. So 87,400 minus 82,300. This is the closing cash balance. That becomes the opening cash balance for May. Similarly, let me have a total of opening balance plus cash receipts of June. So this is a total 94,100. From that, I'll be deducting this total of cash outflow. That works out to be 68,800. So cash balance is 25,300. So this cash balance will go to the balance sheet asset side. Now let me close the profit opening balance sheet to find out the capital. The capital is a missing item. So total of asset side minus general reserve, outstanding wages and creditors at the beginning of the accounting period. 1 lakh is the capital that will appear on the balance sheet liability side. 2,55,000 minus 1,30,000. So this is the gross profit that will go to the profit and loss account. gross profit minus expenses. So I'll get the net profit that I add to reserves. So this is the total balance of reserve. Now I can have a total of balance sheet. That works out to be 1,83,300. This is how the balance sheet is prepared. So I have tried to explain you this sum, considering the given details. Observe the sum on the screen. I feel that you have followed all these things. Observe the sum once again with solution. Also observe the working notes that I have prepared for solving the sum. I think you have followed all these things. Thanks to all of you.